I'm Karwowska. I'm VP Corporate Development and IR for Newcore Gold. I will be making some forward-looking statements today, as everyone has on this panel so far, so please do refer to the disclosure on our website. So, at Newcore, we are advancing our NG Gold project in Ghana. First and foremost, this is a team with a track record and one that is strongly aligned with its shareholders. 18% of the equity is held by management and board, and that's been invested alongside shareholders funding the company the last several years. Our NG Gold project is underpinned by strong economics, a PEA that we released last year, and in addition to that, we see a lot more potential from the exploration across the district scale property that we have. So firstly, the team. The team is led by Luke Alexander, our president and CEO. He has over 20 years of experience in the industry, notably institutional sales in London for 12 years, where he built extremely strong relationships in the industry. And notably on our board, Doug Forster and Blaine Johnson. You may have come across this group before. It's the same group behind Newmarket Gold that sold to Kirkland Lake, and more recently Calibre Mining, which has gone from an exploration stage to now a multi-mine mid-tier gold producer. And as a result of that success and those strong relationships, we've built an extremely strong share register. So in addition to management and board that holds 18% of the company, we have an institutional shareholding of 45%. That includes Franklin Templeton at about 8.5%, Aegis out of the US at about 8%, and Ruffer out of London at about 5%. That's complemented by very strong capital market support with 2 research analysts covering the company. Quickly on share structure, 209 million shares outstanding. Market cap currently is roughly Canadian 65 million, and cash on hand at the end of the year was roughly 5 million. We are funded for the drilling that we have underway on the project currently. So Ghana. Ghana is a great place to be. It's a top-tier mining jurisdiction in West Africa. It is the largest gold producer in Africa, 6th largest globally. It has a stable democratic government that supports mining. It's English-speaking, and it's a very safe jurisdiction. Importantly, look at who's operating in country. You have major senior gold producers with exposure. Notably, I'm just going to touch on Newmont. They're investing $1 billion into Ghana right now to increase their footprint and to grow their production to almost 1 million ounces a year. That'll be their 2nd largest mine within their global portfolio. So at NG, we did just recently, last year, announce the results of a PEA study that looked at the development of an open-pit heap leach project. It had very robust results. At an $1,850 gold price, it generated an after-tax NPV of $371 million US, 58% after-tax IRR, really driven off that low upfront capex of just over 100 million US. That's driven off the fact that at heap leach, you're not building a milling facility, and then contract mining is standard in Africa, so you're not buying a mining fleet. That's complemented by a robust production profile, 122,000 ounces per year, and with that exploration potential on the property, we believe that this 9-year mine life has a lot of room to grow, as well as this back end in terms of the production profile with the exploration on the property. We believe we have a lot of potential to grow out that production profile. And importantly, the PEA did highlight that that can be done through cash flow. So what you see here is our cash flow profile after tax on the project. At a $2,350 gold price, that was the peak gold price when we put this study out last year in April, the project generates an after-tax life of mine US $855 million of cash flow. That more than funds your sustaining capital, but also the exploration on the property. So the key point with our PEA, it has significant leverage to the gold price. When you look at that valuation, we've talked about the base case. Let's talk about $2,350 gold. What you see is very strong leverage, $630 million after-tax NPV. Compare that to our current market cap of roughly US $45 million. We're trading at less than 0.1 times the value that we have on this project. So we believe as we continue to advance and de-risk and prove up the project that we should be trading closer to that true value of the project that's defined in the economics. And in addition to that PEA, we also have significant exploration potential on the property to bolster that economic study. We are located in the southwest corner of Ghana. There's 2 prolific belts that run through that part of the world. We are on that Sefwi-Bibiani belt that hosts the Newmont's Ahafo mine that has an endowment of over 20 million ounces, and Asante's Bibiani and Chirano mining complex that hosts over 10 million ounces currently. So at 740,000 indicated, with an additional 970,000 inferred, we believe that we've only really just started to scratch the surface of the potential of the project. So this is a snapshot of our property, 248 square kilometers, 40 kilometers from end to end. That resource that we've currently defined on the property exists within 5 deposits. Notably, Siem and Boyne are the 2 largest, followed by Niam, Aquachikrum, Tokosea. All of those deposits are open along strike and at depth, providing for potential resource growth longer term. We then have areas where we've drilled but have yet to define a resource. Irati, Kujina Hills, Siem South. Add on top of that, numerous, over 15 targets that have yet to have drilling completed on them where there's soil anomalies and trench work completed. This really speaks to the upside that we have from resource growth on the project within the near-term oxide, open pittable. The second link to our exploration story is the underground potential. So this is a long section of Chirano compared to our NG Gold project. Chirano is 50 kilometers to the north of our project, sits along the same shear belt. It's been in operations for the last 20 years. What you see here is they started with a number of shallow open pits. As they defined the project, what they came to understand is that there were higher grade structures at depth. Currently, for reference, they are mining down to about 800 meters vertical at 1.5 to 2 grams per ton. Compare that to the exploration we've completed on the project, where most of our drilling has only gone down to a vertical depth of about 100 meters. We see a lot more potential. A small subset of our drilling has focused in on trying to prove out that longer-term potential on the project that's deeper, and we've had very good success at starting to define these higher-grade shoots on the property. At our Niam deposit, which you can see here, I'm going to dive into a long section to show you the drilling we've completed there. Most of our deeper drilling has been completed at Niam. This includes all the drilling completed to date. When I take off the lower grade and look at the 0.5 gram per ton and the 1 gram per ton and above in red, what you start to clearly see is these higher grade shoots being defined. And note that at Niam, we have only drilled down to about 300 meters vertical in a handful of holes. So when I take a step back and I look at all the drilling that's been completed to date, we see these higher grade shoots forming, and you see results such as 5.8 over 7, 5.6 over 8, 6.6 over 4. That drill hole is outside of our resource estimate currently. So we see a lot of potential from exploration, both in the oxides near surface and then longer term in defining these higher grade shoots that exist across the property. So what's next at Newcore? We do currently have a work program underway. We are very focused on advancing the development of our project and taking that PEA that we outlined last year towards a pre-feasibility study. The key there is drilling, as we need to prove up our inferred ounces into indicated. We have a 10,000 meter drill program underway, targeting that near surface oxide and shallow sulfide mineralization with that goal of resource conversion. As of today, we have completed and released results for just over 5,000 meters of the drill program, and those holes have targeted Boyne, which is one of our largest deposits, and we've had real success with that program. We've had some of our best drill results, as Rob mentioned. We hit 204 grams per ton over 1 meter. That is our highest interval to date. But what excites us actually more than that higher grade is the widths, the wide zones of higher grade mineralization that we're encountering. These results back from November, 3.36 grams per ton over 28 meters, including 38 over 2 meters, and notably outside of the current pit shell that defines the resource. In October, we put out results. Looking at this is the outline of the current pit shell that encompasses our resource. We're encountering mineralization beyond those limits. So we believe that with this infill drilling, we'll have strong success in not just converting ounces, but then potentially also growing the ounces that exist in NG. So with that, we're very excited. We have more drilling to come. We're only about halfway through that drill program in terms of the results that have been released. And just as a refresher, key takeaways on Newcore: we have a top-tier management team here with a successful track record, 18% equity ownership, we're aligned with our shareholders, a strong capital structure, and institutional investor support with 45% ownership. We have an established resource base at NG with significant potential given the district scale opportunity, and it is underpinned by robust economics that we're looking to advance towards a construction decision. Thank you very much.